I don't know if you saw it Friday afternoon. Mary Daly, I think she is the Fed president of San Francisco, basically came out and started to, a little trial balloon. Hey, the Fed's gonna at least start talking about slowing down. So it wasn't a Fed cut, it wasn't a Fed pause. It was just, hey, we've got to go at this thing a little bit slower. A, did you see that? B, what were you thinking when she said that?
Well, it's just one person coming out with her opinion, talking about sometime in the future, if we can get inflation down and nothing in the market breaks in the meantime. So what's funny about that is, the algorithms are set to pick up words.
I
So the
guess,
market
yeah.
rallied on that. And, they've gone from defining a pivot from reversing to stopping and pausing to now slowing. So pivot is slowing now. So they're like entering these words into the algorithms, and the market's kind of unwinding a little bit of that today, but they are nowhere near pausing. They're nowhere near stopping, and they're not even close to even talking about reversing. So, that's kind of where it's at. It's going to be higher for longer. And, different Fed members will come out and express different things. And I think they've been criticized because they've all been unanimous lately. There's been no dissent. So they're
Right.
being criticized for not voicing opinions of dissent. So I think a couple of them came out with a couple interesting things to say, but that slowing is not even part of the conversation right now. They're going to do 75 next week, and then probably another 75 before the end of the year. Then they might slow down and see what's going on going into next year.
Yeah, it's kind of where I'm at as well. If people follow me on my channel, I basically think we get something the next three meetings, 75, 75. And then the third one, obviously it's far out. I'm like, is it 25? Is it 50? Don't know, but it's something. I think they've got to get to 5%. Because it was really interesting reading Mary's thoughts, because again, you're right. You're so right. They just changed the definition of a pivot. Nowhere in Mary's speech did she talk about a cut. Nowhere in Mary's speech did she talk about a pause. She simply talked about slowing down. And when I hear that, Greg, this is what I'm a simple person, right? I'm like, great. I'm already upset that they're ripping the Band-Aid off slowly. Now they want to rip it off even slower. I mean, talk about extending the length of pain. That's kind of what I saw. It's like, great. So we're going to get 25 and, every meeting until June. I mean, I don't want that. What do you think?
Yeah, and that was just one person. What everybody skipped over was, I think it was Harker or Hawker, whoever. Another one came out a week earlier than
It was
her.
a day before. It was a day before. It was on
Yeah, the day
Thursday. He
before,
came out
whatever.
very aggressive. Yeah, you're
And
right.
said just the opposite.
Yeah,
So they kind
he
of
did.
skipped over that and went for her because, again, the algorithm, there's a lot of algorithmic trading going on right now, and there's a lot of capital sitting on the sidelines. So this was kind of, one of those little things where the algorithms picked it up, drove the markets a little bit, and now it's kind of unwinding, and we're working our way back down to lower levels in the markets. And that's kind of how these bear markets are. Any kind of a whisper of any kind of good news, you're going to get a little bounce, and stuff doesn't go straight down unless there's, pandemic or financial crisis or something like that, like we saw in 2008 and 2020. The big thing we have not seen in financial markets is a complete capitulation. We haven't seen a big capitulation, downtrend, limit down kind of thing that you saw in 2008 and 9, that you saw in the pandemic. And the Fed is kind of moving towards that. So if there is any conversation of, we would like to slow down so our buddies can make some money again, they need something to break. They need a reason for them to jump in, step in. But the biggest problem is inflation. They can't do anything significant until inflation's down, because that's doing more damage to the economy and to the country than anything else right now.
Yeah, I agree. It's really interesting because I've been following the Fed for a better part of 2.5 decades. And usually their mandate is, hey, full employment and stable prices, right? Kind of makes sense. It's what I learned in school. It's been true. I actually think there's a third mandate that they have unfortunately had to take on. It's not official, but I do see them really concerned about breaking something worldwide. I think the UK gilt issue showed cross collateralization or risk, a systemic risk. We have Japan intervention going on now. It appears in the yen. So I think the Fed is looking not only at inflation, not only at, kind of full employment. And right now it's like, hey, we can suffer some pain on the unemployment front to break inflation. But I think they have I think they're looking sideways at the whole world's financial market because, again, the strength of the dollar, we're the reserve currency. Rates are gone up 400 basis or 400 percent or 400 basis points this year, and probably more. There could be something big that breaks.
Well, we're globally interconnected. So all of the economies are kind of hinged at the hip with each other, joined at the hip with each other. The United States is going to be, we're the safe haven, and we're going to be the lender of last resort. So when these other countries get in trouble, we're going to have to bail them out. So that's kind of what's going on right now. And inflation is a worldwide problem. So if the UK gets itself in trouble and needs a bailout, like was done, I don't remember when that was, but the United States bailed out Great Britain. I don't know, it was back in the 60s, 70s, somewhere in that time frame.
Don't know, but yeah, okay.
$800 billion or whatever it was.
When Soros broke the sterling, I think it was called.
It could have been, but if something like that happens, I mean, that's just going to drive inflation, continue to drive it through the roof. And people are already starting to take to the streets in Europe over inflation. So that's what you're facing here. If they don't get it under control, people will start marching in the streets if they can't feed their kids. And it's already coming to that point. The only thing that's kind of keeping it alive right now, or keeping people afloat right now, is there was a lot of stimulus, there was a lot of savings, because over the last 2 years, people didn't travel as much. They had to cut back on things they would normally be doing, eating out, going to movies, all the different things. So people did build up some savings, but the banks, as they are reporting, is that, those savings are starting to dwindle. Credit card balances are going up. So I think we're about 6 months to a year, if inflation doesn't come down and keeps going up, where you're going to see major protests and people really, really, struggling and having trouble.
Yeah, I think so. Again, I think, it's really interesting when I go back and look at Mary's point, because again, she didn't even talk about a lower peak, right? There's this thing called the terminal rate, which will be the highest rate the Fed gets to. She didn't lower that. She just basically said, hey, we're going to give it to you in smaller and smaller doses, which to me means longer and longer and longer. And the only thing I can think of, and again, you're right, it's only one opinion. Hacker, whatever his name is, came out the day before, exactly the opposite. She is a dove, he's a hawk. But the Fed's not done.
He says we're quite a long way away. Bostic, said he wanted to pause after December. So, I mean, I think what happened was they were criticized again for not offering any differing opinions. Kathy
right.
Wood put that letter out. He's looking for a bailout. And so I think that's what they're doing. They're all starting to express their opinions because, they can't all agree unanimously on anything other than we have to get inflation down. And what's interesting is when you compare the economy and inflation to kind of like the housing market, and I'm sure we're going to talk about the housing market here in this some point today, but the housing market has a problem because there's no inventory. So you've got inflated prices and you have zero inventory to correct that. So the inventory is kind of like the labor market. You have high inflation, you have this super strong labor market that you can't crack. So you're not going to get a control of inflation, just like you're not going to get control of housing inflation until you get supply up. So, it's kind of these interesting dichotomies that we've never seen in the history of this country. Usually it's easy to solve. Generally, inflation and the labor market going up and coming down kind of works together. This time, you've got a job market that is just super, super stubborn, and you've got inflation that's entrenched that nobody, they didn't think could happen.
Yeah, it is really wild. We do get a GDP report on Friday, I think, right? First cut Q3. And it looks like, according to the GDP tracker put out by the Fed, or the Atlanta Fed, is pointing to 2.9% positive, which will make the year positive at this point, basically making up for -1.6 and -0.6.
Yeah, and if that happens, the markets will tank, because that's just more ammunition for the Fed. It's so funny. Good news is bad news, and bad news is good news,
Yeah, it's wild. And then again, to your point about the strong job market, every Thursday we get new unemployment claims, and last week it was down again. And, I think it was 219, something like that. The Fed has to see that weekly number go over 300,000. It just has to. I'm not saying it's a good thing. I'm not saying it's fun, but it can't stay this low, right? Because you get that wage inflation spiral, and it's just like, man, we got to hit them again. We got to hit them again. We got to hit them again with higher rates. So it's a
Well,
really
and the
interesting market.
consumers are still spending. I mean, that's the thing.
Yeah.
This is a consumption-based economy. There was an article out the other day that consumers are still out there hitting it hard. Sales are good. Earnings are decent. So, the Fed's got to keep going. So you can't expect, reverse to pause to slowing. You can't expect any of that to happen until you start making a dent in inflation. And, this whole peak inflation that everybody was talking about back in July, when I was like, there's no way.
No way. Yeah, I actually think you're right. I mean, I think right now the highest we've seen in headline inflation is 9.1. I'm not willing to stand here and tell you we have seen the peak. I mean, this winter, we get a reverse in oil and gas. Food's still a problem. Rent's still not in there. Wage services. We might go over 9 again.
Yeah, energy's popping. People's utility bills are going to go through the roof this fall and winter. As we get into the winter, that's going to put even more pressure. I mean, they know this is coming. The thing that I don't get is there's a lot of analysts talking about that rent's coming down. I know that some of the data out there, like on Redfin and Zillow, is talking about rents dropping. I don't know what they're looking at because rent's going up everywhere. And like I said, the people that I work with all over the country, doing deals, real estate investments, what you teach, what people are doing, you buy a property, you raise the rents.
Yeah. It's really interesting because, again, I've read a lot of those articles. There are some areas, like Phoenix, rents are going down, right? Phoenix is a market that was broken by iBuyers, too much air. It's just, there are pockets of broken markets, but yeah, nationally, what's really going on is rent inflation is, again, slowing down, right? It's not 12%, it's 5%. It's 3%.
So maybe the rent
it's
inflation
the rate
might be
of
slowing a little bit, but actual in-place rents of renewals, those aren't going down, they're going up.
It's some wishful thinking. The rate of change is slowing down. Okay, that's true. In fact, as you know, having taught this for a long time, rent inflation of 2 or 3% is kind of normal. With 12, 20, 24%, not normal.
No, and it's been, everything's been just exponentially out of the norm over the last 2 years and just completely distorted. Interest rates to the downside, values of houses to the upside, markets, rents, everything. The last 2 years it's been crazy.
Awesome. Well, Greg, do me a favor. We will talk in episode number 2, the cost of beating inflation. But before we do, where can people find you?
GregDickerson.com. That's where all my info lives. Go check it out.
Thank you, buddy.